I think we should be at 200 already.
Yeah.
But I don't know. Like, there are a lot of theories out there. One theory is that it's whales selling, like people that have held from $1.
Yeah.
Another theory is that there's paper Bitcoin flooding the market, which I lean more towards that theory. I just don't see someone holding it from $1 to 100,000, waiting, not being able to wait another year, and letting Bitcoin add to zero.
Yeah.
But it's difficult to say.
So
it could also be options. It could be derivatives. There's many forms of paper Bitcoin. I don't think we need any more triggers. The triggers are all right in front of us. There are the ETFs with 1.3 million coins, strategy with close to 600, and new strategy companies popping up every day, declaring that they're buying millions of Bitcoin.
Okay.
All the trigger points are here. So we're just waiting now.
Nation-state adoption of Bitcoin is accelerating, fueled by landmark shifts in U.S. policy and evolving global financial dynamics. With the executive order establishing Bitcoin as a strategic reserve asset, governments from Islamabad to Jakarta are evaluating ways to integrate digital capital into their sovereign balance sheets. Pakistan has publicly pledged to mirror America's playbook, pausing any further Bitcoin sales while exploring budget-neutral accumulation strategies. Other jurisdictions are quietly studying the legislative frameworks needed to authorize reserve purchases, mindful that taxpayer transparency makes covert Bitcoin hoarding impractical. Some may leverage government-owned utilities or equity stakes in Bitcoin-focused firms to stealthily build positions. Meanwhile, central banks such as Switzerland's are already deploying Bitcoin derivatives and equities, benefiting from outsized returns even as spot prices remain muted. In this climate of cautious experimentation, the question isn't if nation-state Bitcoin holdings will grow, but when political consensus and legal guardrails will align to unleash a tidal wave of institutional demand.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
There is a lot of interest in nation-state level adoption, especially with the change in the U.S. landscape and the passing of the executive order creating a strategic reserve. So I think one of the public ones is Pakistan. They said they're going to replicate the strategy from the U.S. But we know also there's other countries that are interested to learn more and possibly start their own. I think they have not yet started. They can accumulate Bitcoin in a budget-neutral manner, but they have not yet done so, to my knowledge. But they definitely are not selling anymore. And they have not yet passed the Bitcoin Act, which would allow them to accumulate Bitcoin, like a large amount of Bitcoin for their strategic reserves. But I believe that's what is going to be the trigger point for other countries. People want to follow. They don't want career risks, saying, I'm going to buy Bitcoin for Indonesia. They want to wait until the US buys it. And probably when they finish buying, then they'll go, okay, that was a good idea. We're going to do that now. And they'll buy it $10 million a coin. It's not so easy for countries to accumulate in secret because they usually need to be transparent, because it is not it's not some president's money. It is taxpayer money. So they need to pass the laws that would allow them to create a reserve and allow them to accumulate. So I don't believe most countries will accumulate in secret, or if they are doing so, they're able to do it in a very clever way. Like maybe they're mining it in secret through a government-owned utility company or something like that.
Something like maybe the MicroStrategy or something like some kind of...
Buying an equity is far simpler. So you can direct the central bank, or the central bank might direct itself to buy securitized Bitcoin equities like MicroStrategy or Strategy. But we know for a fact that the Swiss central bank owns a lot of different Bitcoin derivative equities, and it's done very well for them.
Despite Bitcoin flirting with new all-time highs around $120,000, its price action belies the magnitude of underlying institutional demand ready to break loose. Samson Mow points to paper Bitcoin flooding spot markets, ranging from options, futures, and over-the-counter derivatives to tokenized vault tokens, as one culprit for price stability, absorbing flows that might otherwise bid up spot. Large holders from the $1 era find it easier to monetize via derivatives than unload real coins, muting volatility. Yet the foundational triggers are already in place. US spot ETFs control over 1.3 million BTC, MicroStrategy and Brethren custody nearly 600,000 BTC on their balance sheets, and dozens of public Bitcoin treasury firms join the fray daily. Ethereum's role in tokenization, serving as the base layer for stablecoins and real-world asset minting, underscores crypto's convergence with Wall Street. As tokenized dollars and securities proliferate on Ethereum, Bitcoin's narrative as digital gold gains even more heft, setting the stage for a synchronized rally across both major networks once liquidity conditions align.
The whole point of the Omega candle is it just goes up very rapidly all at once. Right now, everyone is bored. We're at like 105, 16, and people are bored already. And usually these things happen when people are bored and they're not expecting it. So you'll wake up tomorrow and it's 210.
Yeah. Okay. Why you think that the price is actually, because there is a lot of this institutional demand, so one is speaking about this strategic reserve. Why you think that it's not really right now seen in the price? Because we should be probably somewhere indifferent, right?
I think we should be at 200 already.
Yeah.
But I don't know, like there are a lot of theories out there. One theory is that it's whales selling, like people that have held from $1. Another theory is that there's paper Bitcoin flooding the market, which I lean more towards that theory. I just don't see someone holding it from $1 to 100,000, waiting, not being able to wait another year, and letting Bitcoin add to zero. But it's difficult to say. So it could also be options. It could be derivatives. There's many forms of paper Bitcoin.
So what you think that is now the most important, like a trigger point for the, let's say, I don't want to say a bull run. Of course, a bull run for the 15 years, but for the like another break and really starting this maybe institutional or nation states formal. So
I don't think we need any more triggers. The triggers are all right in front of us. There are the ETFs with 1.3 million coins, strategy with close to 600, and new strategy companies popping up every day declaring that they're buying millions of Bitcoin.
Okay.
All the trigger points are here. So we're just waiting now.
The institutional and sovereign catalysts for a seismic crypto breakout are no longer hypothetical. They stand poised at the finish line. With regulatory approval of spot Bitcoin ETFs, corporate treasury mandates, and legislative momentum toward official Bitcoin acts, the blueprint for digital reserve accumulation is complete. Samson Mow emphasizes that we need no fresh triggers. The market awaits simply the alignment of liquidity and conviction. As global liquidity re-expands, propelled by central bank easing and strategic reserve mandates, Bitcoin's supply cap will force prices higher, compelling legacy institutions and smaller nations alike to join the stampede. Ethereum's zero downtime reliability and staking yields will further attract enterprise tokenization on its smart contract rails. In this converging landscape, Bitcoin and Ethereum are not speculative fads, but foundational pillars of a new monetary order. Once the latent demand translates into realized buying, the next leg up won't just surprise the market. It will redefine the concept of digital capital forever.